Good morning, replayers. Bright and early, 8:24 a.m. Eastern Standard, or Eastern Daily Time. I'll let the room fill if any of you guys are awake. Most people are probably getting ready right now. So, Derp, what's up? Richard, good to see you, good to see you. Just give you guys a quick glance at what's going on. Scope tweet, what's up? So guys, last night we called a short position. Good morning, Richard. Prime fired off a short position in the Euro USD. At about 4:15 this morning, it covered and went back long. And last night, I talked about one of the most difficult things for traders to understand, and that is that there is a biphasic nature to stock markets and to price action, okay? Especially in Forex. And that biphasic nature is that pricing either occurs in trends or cycles. Trends or cycles, okay? Now, what is a trend? A trend is when we get a nice move, such as this or this. Maximize, good morning. So the trends you can see, they're very clear, sharp moves that tend to have volatility only in one direction. Right now, what we are in is what's called the cycle, okay? So we have a biphasic pricing nature. Good morning. And the thing is that when you're in a cycle, you know, we call it a stop loss at 20 points, okay? For you guys that were going to take an overnight position. Ahmed, hi. Thank you for the invite, Maximize. Appreciate that. We're having a great morning. We're making money. So last night at 10:31 p.m., Prime called a short position on the daily. We did that at 11.94, okay? 4:15 a.m., Prime covered at 11.80. Not a big gain. It was only 14 pips. And then it went long again from 11.80. And we are currently at 12.03. So now we have a 20 pip gain, 34 pips overnight. But it's important to understand, this is the daily chart, guys. If you're trading on a daily chart, you're expecting to make a price gain within the day, okay? And so you're going to have to ignore all of the little price changes that occur intraday if you use a daily chart to select your direction, okay? Now, what is the option to this? When we are in a trend, it's okay. We can use daily charts. The price action is going to continue in the trend itself, okay? But if we see that we go into the cycle phases, okay, if we see that we go into the cycle nature of price action, what needs to occur is we're going to have to drop that down to a smaller time interval, okay? We have to drop that down to a smaller time interval, either a tick chart or a time chart. And now you can see the system going short at 11.94. And then going long again at 11.75 even, we got this. Actually, I was using the 3,000 tick chart. It looked like 11.80. 11.75, Prime goes long again. And now you can see at 12.09 it went short. And when we are in these cycles, you cannot use the longer time charts for time series, guys. So what's going to happen? How do we play this? Well, this area right here, this is about 11.95. This area we know is triggering on the algorithm. It's triggering the long or short based upon the daily. Okay, based upon the daily chart. This price level is very important for some reason. Why? We don't know. Probably a hedge fund that's either buying or selling. Maybe it's competing hedge funds buying and selling at this level. But that's not necessary for us to know because it's impossible to know what the banks are doing and what the hedge funds are doing. We don't know what their risk parameters are, and we don't know exactly what their forecasting is. but we can follow the price action based upon an artificial intelligence algorithm. So once it goes short, we go short. Once it goes long, we go long. Now, how does this play into the daily? We use this by when a short is triggered here, and we know that 11.95 on the daily is what's distinguishing a short or a long, and we're getting competing signals. Okay, we get competing signals. It's you know, there's two ways you can play it. The first way is you place your stops at 20 pips and then at 30 pips, and as you get stopped out at these cycles, 40 pips, you're okay with that because you're playing the daily chart, and a 40 pip loss is going to be nothing for you because you're looking for large daily moves, okay? And as we said, Prime was taking 150 to 250 pips, okay? And so we'll take the 1 or 2 or 3 losses at 20, 30, 40 pips as we allow a little bit more room for this cycle to initiate. But then the other aspect of it is that when it fires off, we get this huge gain that is way, way larger, at least 2 to 3 times larger than the losses that we took by getting stopped out on the daily chart. Okay, that's the first way we play it. The second way we play it is that in a smaller time cycle, if we notice that the price action is not coming lower than that area that is causing the stops, right? So on the daily chart, we have both longs and shorts being fired. When the price goes below 95, it looks like it's firing off a short. When the price goes above 11.95, it looks like it's firing off a long. The system looks to be confused, right? No, that's not correct. The system is not confused. The system is making real-time changes based upon volatility and volume and price action and all these other instances that it's taking into consideration as far as data points. The system is 100% right. It's the person that's reading the system that can be wrong, okay? If we notice that price action comes here and it's having a difficult time, as it is, you see the bottom of this candlestick, it's having a difficult time breaking through 11.95. If we fire then again long, and this is based upon a 5,000 tick chart here, this is not a time chart, this is based upon ticks. You can see the ticks right there, okay? You see, each price that comes through is initiating a tick. So every price action that you see here is one order coming through, and it's initiating the change in the tick. Jose, what's up, man? So you see, every time this number decreases, that's one order that came in. Another. So you can see, we've got volatility, we've got price action, and we like that. That's the nature that we trade in. So last night, Prime took a short position, 11.94. We covered at 11.80, went long, then short again at 12.09. You can see how, yeah, pretty easy, right? It's not that easy when you're actually building it because there's so many false signals, so to speak, that you have to account for that it's insane. All right, so now look at this, guys. 5,000 tick chart. What did I just tell you guys, right? If we have difficulty breaking through at 11.95, now I don't even have to look at my daily chart. I know that this just fired off a daily long. This solidified the daily long, okay? This is a 5,000 tick chart right here. So if I go back to the daily chart, boom, we're long. So at this instance, at 12.06 on the daily chart, we will be long at 12.06 right now. You see how that happens? And we know that there's some volume coming in at this level, both on a short-term and on a long-term basis, and this is what makes us very, very less likely to stop out. We're much less likely to stop out. All right? And so, however, we have to consider, and you see how the price action is going to be volatile. All right? We've got orders coming in, guys. The mornings have been very good for price action. And that's why I wanted to hop on early in the morning and show you guys this. So, we are likely to have a nice move, a nice bullish move from here over the next at least 5,000 ticks, but on the daily, we are now considered long. Okay? So that position has now fired off long, and Prime is going to take advantage of all of the different parameters that the algorithm uses, including the artificial intelligence aspect where it's actually learning the price action. It's actually learning. Each new bar is giving new information to the system, and it's actually learning exactly which positions are worth taking, which are not. Now, because it's fired off long, does this mean that we, somehow don't place a stop loss? No, we always place a stop loss, okay? However, we just know in the back of our mind that because we have alignment based on our 5,000 tick chart and the daily chart, that this is likely to be a very nice move upward, okay? But we do that considering the risk versus reward ratio, or rather reward versus risk, I like saying. We want reward 3 times in excess of risk, unless you're trading a system. Killing the pips. Hashtag pip killers. Can I get a hashtag pip killers? Can I get a share? So what we do here, guys, is we know, even though the system is, saying that we're going to have a nice long position here from 1205, 1207 area, we still place the money management on deck. Money management is always on deck. We're willing to take, we just took a 20 pip loss, we're willing to take a 30 pip loss to the downside, but what we're looking for is that 100 pip gain. And it eventually will come. And it will come more than 100 pips. It's likely to come with some volume, okay, which means that it's going to move quickly. So when we're in this cycle, okay, and this is what I covered yesterday, Jose, is that there's 2 phases to price action. All right, price action is biphasic. We have trending, which are very clear, precise movement, and then we also have cycles. So trends and cycles, which tend to be very choppy. And if you don't know how to trade in each of those environments, and you don't know how to identify each of those environments, you're going to get killed, because you're going to try and scalp price, and you're not going to know how to actually scalp price, and you're going to end up with 20 to 50 pip losses all day long. All right? So how do we counter that? I just explained it. You guys can go back and watch the beginning of the scope. But what I wanted to do is hop on here and show you exactly what the mindset of taking losses and putting risk and reward in play is. Yep, awesome, Jose, awesome. So, the thing with price action is that no system is going to be 100% solid. So you have to know that when a system is not 100% solid, how do you fill in the gaps? And the only way to do that is to use multiple time series. You can't just use one time series and expect to never take losses, because there's going to be chop and cycling at some point. However, right now we're long at 1205, okay? And we've already got price action moving up. But, like I said, last night, we don't, I don't consider 10 to 20 pips in either direction price action, unless you guys are trading some normal, some abnormally large lots. That's $100, $200 either way, okay? And we're after the $1,000 to $2,000 price moves. So, what I usually tell people is, if you're going to play 10 to 20 pip movements, your account has got to be really, really big to actually make money off that. Because you're going to be trading, $100,000 lot sizes. That means you've got a $10,000 account right off the bat right there. And not a lot of people have $10,000 to play with. And if you want to have exposure in the Forex market, how do you get it if you don't have an account that size? Well, you start thinking on a longer term chart. All right, you got that? The banks and institutions that handle large amounts of money, they're not worried about the 20 and 30 pip movements, okay? These guys are in for the 100 pip movements, and that's how they determine their risk. They're always going to go with a larger time frame because they want to take the meat out of the market. Top, what up? So they're trying to take the meat out of the market, and that is why they succeed, because they are going after the larger moves. They put more money in their pocket, and it might take a week, but in that week they avoid a lot of losses by identifying the trend correctly. Okay, All these guys that try to do scalping, it's like a 50-50 coin flip. There's really no advantage to scalping because it goes either way. And you end up with a lot of losses and a lot of gains, but your net ends up being almost nothing. All right? Especially if you're talking about commissions. The commissions can eat into that net quicker than you'd ever imagined, and a winning strategy can quickly turn losing because the commissions will eat that gain. So, what did we learn? Well, we learned that we are long the euro right now from 12.05. That price action's already taken care of itself. And we also learned one of the most important things, and I'm going to keep saying it, is that there are two phases to price action: trend and cyclic. All right, trend and cycle, or trending and cyclic, however you want to say it, but you need to know how to identify both. All right, Jose, take care of that. Yeah, man, take care of those leg gains. Today is actually leg day for me, so that should be fun. What's a normal cycle? All right, good question. So basically what I do is I rely on the system. Okay, the system, is going to identify when to buy or sell much better than I can. Okay, so what you need to determine is what the swings are that you would like to see in your account. If you're okay being down during the day, then using a daily should be okay with you. Okay? It also depends on the account size. Clove, what's up? If you're trading a smaller account size, you're probably going to go with a longer time frame in the time series. You're probably going to go with a 4-hour or a daily. What's up, bud? So right now we're long from 12.05, and I showed you guys on the 5,000 tick chart exactly why we were long. I'm going to go back to that 5,000 tick chart and just show you real quick. You guys want to know what gold looks like? This is what gold looks like. So last night, okay, we took a short position actually at 10. It was around 10:30 p.m. We caught this move, and you can see there was some chop, but we caught another move downward from 11.95. Went long at 11.78 to 11.80ish. We took a short at 12.09. Okay, and then right now we just took another long from 12.05. So this gain was not big, even though this candle is pretty large. We didn't end up with a large gain here. But like I said, our goal is to take money out of the daily chart. We're just using the 5,000 tick chart to time the entries and exits, because we had a price level here that was having a lot of fighting and a lot of chop. So we eliminate the chop by going into a smaller time frame and seeing how the algorithm is handling the smaller time frame, because this will allow us to time our entries and exits correctly. Alright, that makes sense to you guys? Alternatively, on this candle heading up, once we got above 11.95, once we noticed that there was a lot of price action around this area, we could have went long around here. And you can see that that level did maintain a support to this candle. So at any point on this candle here or this candle, when we actually got the signal, this would have been the signal to go long at 12.05 on the daily chart. Alright? So, questions about that stuff. Probably much different than you guys have ever seen in terms of valuing price action, okay? So what you guys want to understand is that every trader in the market, flashing the guns, that was for you, Jose. If you didn't cut out of this room, already, that little flash of the gun show, that was for you, because I know you're going out for a run right now. Anyways, every player in the market, whether it's a retail trader, a bank, an institution, what have you, if they're in the market, they have their secret sauce to valuing price action and to determining when they are taking a long position or a short position, and they also have trade records as to why that is occurring. okay? What makes system trading different is that the trade positions are not being initiated in terms of valuation by a human. They're letting the computer calculate the valuation, and then either the human is entering the position long or short, or the computer does it automatically, and they always have humans watching the systems, because if new code is entered into the system, they usually put it into a testing environment, and they see how it performs in a testing environment, but sometimes bad code does make it into a live environment. How quick can you make? Yeah, so basically this price action is based on a tick chart. So to give you an idea, this morning, all right, so this morning, we had a long position initiated at 4 a.m. Okay, so the system said go long at 4 a.m. Obviously, not too many people awake at 4 a.m., but we would have went long at 4 a.m., sorry, and we exited that position at about 5:45. So the total holding time of that position was 1 hour 45 minutes, and we took away about 35 pips. It looks, it's from 76. Yeah, so we took out actually 40 pips from that position, and that was an hour and a half time hold, 40 pip gain right there. What's the equivalent in 30,000 euro in USD? Well, you would just times 30,000 times 112.11, which is the current price of the euro, and that's what it would be in euros. All right, so that's the thing with currencies. When you have a currency pair, you actually just have the equivalent of what the currency is in pricing between two different pairs. Okay. So if you want to know what 30,000 USD is, you just multiply that by 1.1211, which is the current price in the euro, and that's how many euros it would be. So technically, euro is still more valuable on a nominal basis than the USD. However, it's fluctuating every second, every single tick. If you go to a counter to, if you're going traveling and they have the counters where you can exchange foreign currencies, every single tick, when they give you the money, they're determining that value based upon the current spot price in the Euro USD cross, or whatever currency you're getting exchanged for when you go to a different country. So currency markets are extremely important because at any given time, not just the travelers need to have currency exchange when they go to visit a new country, but import-export business is usually done with those valuations taken into consideration. So a lot of import-export businesses do dabble in currency trading because they need to know exactly, if you have a shipping company that is going to be shipping chemicals across, an ocean, and it's going to take 4 weeks to get there, how do they value that? What if it's worth less in terms when it gets there? Is it better to invest in euro or USD? Well, I'm not sure what that question really means, because basically the euro USD pair, you're based upon that, that first currency, all right? So we're valuing the USD based upon the euro. If you're trading the euro USD, you're valuing USD based upon the euro, okay? So, when you're trading, you're actually selling euros or buying euros, and then your account is making the equivalent change in terms of your home currency, okay, whatever that currency is, and that's based upon your brokerage account. They do that transaction automatically. So, if you're saying it's better to invest in euro or USD, well, it depends on where you think the euro is going to be. If you think the euro is going to be more than the euro USD, obviously, you would be long the euro. And so if I don't know if you guys remember a while back, Jay-Z was saying that he wanted to take payments only in euros for concert performances, right? Well, if you book a concert 8 months out and you think the euro is going to be worth more in 8 months and you're going to get paid up front for that performance, I would say, you know what? Pay it in euros, right? You're long the euro, and so what's going to happen is that as the bookings happen, when you actually get your paycheck, you know, if they have to pay you in euros, and you know that the euro is going to increase, and you're getting, say, a payment up front and then payments as the performance gets closer to date, then you would want to make sure that it's written into your contract that you get paid into a different currency, or you get paid in a different currency. And Jay-Z did that, and a lot of performing artists did that because why? Well, they had someone that was in, you know, a financial capacity giving them advice as to whether or not they thought that the currency would be worth so much more that it would be worth it, you know, to actually write that into a contract. So, guys, we're still long this position right now, and we're heading up into how many other coders or traders have something similar to analyze, predict more. Well, a lot of different banks and institutions hire coders, and they're running systems as well. But this particular system I coded without telling anybody, so there's no system like this out there that takes in these particular data points, etc., etc. So there might be something similar, but the fact of the matter is that anyone who has the capacity to code this type of system probably would never sell it, to be honest. They would never sell it. They may lease it, they may rent it, they may use it at a bank, but the fact of the matter is that it becomes proprietary property, and you know, it becomes copywritten code. So the code that I have written and that other people have written is all copyrighted. The bad part is that if you do it under a you know, an employer at a bank or something like that, technically they own the code that you create. So that's the only downside to being employed by a place who's actually having you write this code if you're a coder, is that the bank will take ownership, or the institution will take ownership of your creations. It's kind of like being an artist and saying that you did not create your art. Obviously not cool. So if you're in a creative capacity, the laws are definitely lagging. In terms of technology, laws lag the reality, and that's a sad part. If I was an artist, a performing artist, you know, if Def Jam were to sign me for a rap song, I created that song. Def Jam gets profits from it, but they don't take ownership of it. But unfortunately, when it comes to technology, it's not always like that. By the way, guys, did I show you guys my cup? Proceed as if success is inevitable. That is the word of the day. All right, guys? So I just wanted to come on here and show you guys that trade and how we're entering it and how we're putting it on. I hope you guys enjoyed that. It's 8:52. Get out there, kill it today. Good to see you guys on early in the morning. As I said, we are currently long. I do expect some chop. You know, until we actually have a breakout from this level at like 11.95. Until we see something pop, we are technically not really trending. Unfortunately, we have to deal with this cycle. And just kind of trade smart around it and place smart stop losses. For someone who wouldn't be doing their own coding. Alright, Richard, sounds good. Way to hustle, man. Way to hustle, brother. I can't recommend any other system because obviously I code my own systems and I don't know exactly what the other systems are taking in terms of profits and losses. You know, every system, like I said, most large entities, banks, hedge funds, institutions, they have multiple systems running because no one system can cover, you know, all the different atmospheres of the market, nor can one system cover different markets. So there may be a system for trading equities, there may be a system for trading futures, there may be a system for trading currencies. And so banks and institutions will employ different systems. And that is part of their intellectual property. That becomes like a physical property to that institution. And so, you know, those people and institutions and entities that have the ability to hire coders, they're not going to give away that code, you know, especially if it works, you know, because the code becomes worth more than they could lease it out as, because they get money on lending. Don't forget, like an institution, they're actually trading money on very, very low interest, but they're borrowing huge amounts of margin from prime brokerages, okay? I mean, huge amounts of margin, $100 million, okay? $10 million, you know, they may borrow $10 million just overnight, all right? They may borrow $50 million just for an overnight play or just to cushion risk, you know. So the amount of money that they have access to makes it, you know, on a whole nother level. When they're employing their codes, as you make more money with the system becomes worth more, even if the system doesn't change. Now, most people will code systems on a daily basis, like I do, to make sure it becomes even more precise as time goes along. However, with that occurring, you need to make sure that there's steady income coming in from the system as it's working, because obviously you have to prove to your clients or your investors that stuff works. So, you know, like I said, guys, right now we've taken a position 1205 long. I'm going to update you guys. It won't be real time. Now, the updates that I give through here, obviously, if you're following along and you're taking the same exact trades, you got to place really tight stops, 20 pips, 30 pip stops, because if we are in one of those cycles and we're going to have a lot of price movement and fighting up and down, you can't really step away from positions overnight. Nobody can stay up 24 hours a day. The system itself will be sending like alerts to me on my phone to let me know when to take positions and when to not, or when to exit, when to enter, and so forth. So obviously I can't hop on scopes real time 24 hours a day. So if you guys are following along, I'm actually giving the price levels at which we are taking the trades. No problem, guys. So go out there and kill it, and have a great day. I'm going to actually have to start screen capturing the plays, the long and short positions, as I take them. As a matter of fact, let me just do that. No problem, Claveris. I hope you guys learned a lot. Do you guys have any questions before I take off for the day? Because it's looking like volatility is going to start pumping up. No problem. No problem. You're welcome. I will, man. I will. I always have fun. You got to have fun on a daily basis, or else this whole thing called life is not worth living, right? So, any questions? Any questions? No questions? I don't see anything, so I'm going to take off. I appreciate you guys' attention. I appreciate you guys hopping on and giving me a reason to be here. And let's make some money, man. Do I do this full time? Yes. Yeah, if you have a question, let me just show you guys really quick. So, guys, the hashtags that I'm paying attention to, hashtag FX Prime, hashtag PipKillers. If you guys want to reach out to me, you can do so on any of these social networks here. You guys can screenshot this so you have it. I'm not too active on Blab, but Twitter, Instagram, and Periscope, and probably going to get more into Snapchat. I am very active on. All right? So you guys have a great day. Enjoy. And if you have a question, reach out to me on Twitter and use those hashtags, because I'm watching those hashtags. All right? I will see you guys at a later time on a later scope. Ciao.